So, what's going on with the Fed? What's going on with rates? What's going on in general in the real estate market? In today's video, I'm going to be breaking down exactly what you need to know if you're looking to buy or sell in this market. But first, I am a realtor here in Orange County, so if you are looking to buy, rent, or sell, make sure you reach out to me. All my information will be in the description below, but I will also put my number right here. That way you can easily give me a quick text or a call. Well, now we'll get back into the video. So, the Fed cut rates by a quarter point, which everyone is expecting. And like I was saying, if you watch my previous videos, we were expecting rates to come up. A lot of people weren't expecting that. They thought it was going to be synonymous where the Fed cuts rates down and then mortgage rates go down. No, interest rates actually the day before were 6.13. Fed cut rates. Now we're at 6.22 just the day afterwards. So why did all of this happen? Reason being is in anticipation of the Fed rate cut when Jerome Powell said there was going to be 3 rate cuts by the end of the year. The mortgage industry baked in that anticipation, and that's why we saw rates lowering. Now that they did exactly what they said they were going to, we expected that. So that's why we saw a little bit of an increase up. Number 2 is where are rates standing right now? So currently, actually, rates are around 6.3%. So up a good amount from 6.13. However, when you consider that they were at about 7.25 in the beginning of the year, we still have about an extra 10% in affordability for most buyers. Also, you're probably seeing a lot of headlines that say lowest in a year. So what does that mean? Is we just have the lowest rates that we've seen in this calendar year. When we were at 6.13, it was actually the lowest in 2 years. Now we're at, again, around a 10, 11, 12-month low of interest rates. Now let's talk inventory. It's higher. Again, you're going to see these headlines, and I've even made videos. We have the highest inventory in 5 years, which is true. But if you compare it with the average, we're still below the average level. Meaning, we have less homes to choose from. Affordability is starting to grow. However, things are both going into the position where we want it to go. So we have lower homes than we want, but it's ticking up. We still don't have the affordability that we want, but it's still getting better. So we're coming slowly, even into more of a buyer's market than it is right now in Orange County. So now, the winter market. Normally, we see a decrease in the winter in demand. However, because we've had such a weird year in constant demand, where normally we see a spring up in spring, summer, and it goes back down in fall and winter, all year we've seen this. Why? Because the anticipation of the Fed rate cuts, which we just saw, and interest rates and affordability growing. So now that we're seeing this affordability grow, we're having more homes on the market, this winter might heat up. So, what's the outlook? As I always explain up front, nobody knows. But let's work with the data. So, what are we seeing? Inventory slowly rise. Affordability slowly rise. So it's meaning we're having more choices. We're having more affordability. So we're going to have more buyers into the market. Meaning there's probably going to be a good amount more competition in the next few months than we have seen in the past few months. Now, is it going to be COVID levels? Absolutely not. So, if you're looking to buy, I would say right now is going to be the best window, where not many people are seeing the headlines just yet of great affordability, and there's still kind of stagnant homes on the market. Once we get into that winter and spring and beginning of next year, that's when the headlines are going to hit. Affordability is probably going to be even better, but we might see the competition finally create an upward pressure on price. So if I was a buyer right now in today's market, what I would be doing is writing offers on homes that have been sitting on the market a while and asking for seller credit to interest rate buy downs. If you don't know what that is, I have videos on that. You can look it up. But basically, the seller contributes towards your payments, and you can pay yourself into 3, 4, 5% interest rates. And then when rates refi, or when rates go down, you can simply just refi. So you have a 3, 4, 5% interest rate now, and when the actual interest rates come down, you can refi, and you bought at today's prices. That's what I would be doing if I was a buyer. Now for my sellers, this market, to be quite honest, is going to be pretty hard to sell. It's the winter, so less people are looking, even though the affordability is creating possibly buzz. It's the winter. It's the holidays. People are still putting their plans on hold. I do think there's going to be more buzz than we have seen in the past in the winter markets. However, if right now you're contemplating putting your home on the market now or towards the spring, I would say if you're not on market just yet, in the spring might be a better option, but it really depends on your scenario. If you need to upsize into a new home, you need to upsize into a new home. If you need to move, you need to move. But if you're looking for the biggest bang for your buck, then waiting might be a good idea depending on your area. So that's the real estate market in a nutshell, and hopefully around 5 minutes or so. If you enjoyed the video, make sure you subscribe because I release videos just like this every single Friday. But as always, thank you so much for tuning in to this week's video. I'll see you in the next one.